Hello to everyone, my name is Gregor Horvat and welcome to our new update Surfing the Elliott Waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at dollar index, cable, crude oil, dollar Mexican peso, Aussie and dollar yen. So dollar index, as you know, is in a recovery mode and looks like that there is room for more upside, since I think that we are in a wave A of a minimum 3-wave recovery. So 105, 106 remains important resistance. Of course, nothing moves in straight line. I think that there can be some pullbacks going forward because we can see 5 waves up recently that stopped at this 103.60 resistance. So I think that there can be some still slower price action before we will see a new leg higher. But overall, dollar strength should resume. And so on the other hand, we should be aware of more weakness on other major currencies like pound, euro, even Mexican peso and Aussie could drop, as I will show you on the next chart. So if we resume with cable, firstly on a higher degree chart, looking at the daily time frame, there was a 5 waves up and looks like that we are breaking this trend line. So in my opinion, more weakness here could be in the cards. Okay, also this trend line can be very nice resistance around 128 to 850, around there. Let me check this also on the 4-hour chart. So you can see here that's the same great trend line. So resistance is the former swing high here at 128.18, and of course there you have the 50 and the 61.8% pips a little bit higher. So hold this zone could potentially be very interesting for a next sell-off on cable. Okay, because as I said on the daily chart, I assume that we are here finishing the higher degree 5-wave rise. Also, we came very close to this trend line resistance looking at the monthly chart. So clearly there can be some reversals going on, meaning that pound could drop further. Also, let's take a look now on crude oil. Now, I think that crude oil is in a recovery mode after it broke this downward channel. So it looks like that we tested the first resistance here at 84, around there, but there can be even more upside coming, because what I see on a smaller time frame, okay, there is a nice ongoing 5-wave cycle, I believe, from June lows. Okay, so that's wave 1. You have a wave 2, and looks like that this very strong move to the upside recently can be wave 3 with an extension. So after a completion of a wave 3, you would expect that wave 4 can retrace 38.2% or even 50%. So because this latest rise unfolded in 3 waves, I just assume that maybe wave 4 here could really be deeper. So watch out for these support levels to be retested, and then ideally, if I'm on the right track here, we should see a reversal back to the upside later this week. Okay, so for now we are still tracking a corrective stage. Before that we were tracking potential flat, but because that was a 3-wave rise, I think that at the current with the current situation and dollar strength, there is a real probability that wave 4 will be deeper, but still part of this higher degree uptrend. So after a retest, let's say $77 per barrel, I would be looking for a new turn to the upside. Invalidation level obviously is at 72.46, because wave 4 must not trade into territory of a wave 1. But even if we already go back below 75, I would start doubting in this bullish incomplete segments. Okay, but for now, since we are looking for more short-term weakness here down into wave C, I think that this could bring also commodity currency slightly to the downside. So I'm watching here dollar Mexican peso. Now dollar and Mexican peso is, in my opinion, in a downtrend, but after it stopped recently at this lower trend line of this parallel channel, I assume that there can be some higher degree corrective recovery still. So looking at the 4-hour time frame here, maybe that still will be some kind of a triangle in wave B of this ongoing recovery, or maybe this wave B will be a bit deeper towards 78.6%. So I still assume that this could be a counter trend movement, and that bottom here at 1664 will stay untouched, unless this was something else like a flat formation possibly. But still, because that was the first leg to the downside here, that was from 1740 resistance to 1619 support in 3 waves. That's why I assume that this whole movement is still corrective, potentially wave B. Okay, so watch out for a new turn to the upside if really, and that would really be helpful if crude oil would come lower. Now let's take a look on AUDUSD. So AUDUSD is still in this higher degree corrective downtrend. We recently retested this 78.6%, but I assume that maybe there's another leg to the downside missing, because when looking at the 4-hour time frame, there can be ongoing bearish impulse. Okay, that's a wave 1, wave 2, nice extension down for a wave 3, and wave 4 is now testing former swing lows. So this whole zone at 64.50 up to 65 is going to be very, very important. So watch out for potential next sell-off from there. Okay, so for now, still we are in a downtrend on AUDUSD. We are approaching some supports, but at this stage I'm not seeing any evidences that we are bottoming. Only if we will see, let's say, 5 waves up from that recent lows, and let's say we rally back towards 65, 60 or so, then of course, in impulsive fashion, of course, then of course I would be looking for a bottom in place. But for now, I still think that's a little bit too early, especially when you have dollar index in recovery mode. And now finally, let's take a look on dollar yen. So dollar yen is coming into very big 78.6% fib. So I think that's going to be a very important zone here, 145, 150, because there is going to be a new speculation, if Japanese yen will drop further, that Bank of Japan could actually bring back on the table. So if these interventions will really be more and more highlighted in the next few days, few weeks, I think that there will be higher degree chances that this is really going to be the case, and this could potentially limit the upside here on dollar yen here over the next few weeks, maybe months. But looking at the short-term structure, it's still ongoing recovery. I'm tracking these 5 waves up within higher degree wave C, and even these 5 sub-waves up here can still extend a little bit further. Possibly we are just now slowing down for a minor wave 4. So if my assumptions are correct, then we should definitely stay here above 143.90. If we see overlap with this level, then of course our wave count will have to be adjusted. But for now, intraday trend is still intact as long as this level holds. Traders, thank you very much for your attention. Thank you for watching, and talk to you soon.